Joining us now is Blackstone Global Head of Private Equity, Joe Baratta. Joe, it's great to have you on the show. Welcome.
Hi, Morgan. Thanks for having me. Nice to be here.
You have been busy. It's 4 deals in the past 3 or 4 weeks, roughly $20 billion in total enterprise value. Can we say that deal making is picking up now?
Well, I think, we definitely went through this period of transition from one state of affairs in the market, global cost of capital rising significantly, and that causes a pause as buyers and sellers readjust. 3 of those 4 deals that we announced, we've been working on for over a year. So it's taken a while to get these done. So I think it is a sign that activity is returning to the market, but I think it'll be slower than it was, certainly than in 21.
Why do you think it'll be slower in 21? And I ask that knowing, you just sort of touched on it, but knowing we've had a number of bankers and a number of private equity firm managers on the show in recent months who have said just the spread between bid and ask has been too wide and that needed to correct itself. So assuming that is what's happening now, why does it stay slower than we've seen in the past?
Well, I think there are 2 segments really of the private equity market. There's things that transact in the public markets, and then there are private equity firms selling things within the industry to each other. And I think that will be slower because a lot of deals were done in the 2019 to 21 period. Private equity firms don't have to sell; they can wait. And there hasn't been a lot of value creation yet in that vintage 2019 to 21. There'll be some deals done, but I think that part of the market, which was comprising roughly half the private equity deal volume, will continue to be slower.
Joe, I'm curious about the dynamic between what you're willing to pay, what investors are willing to pay in the private markets, and what companies will sell for. And using Rover as an example, $2.3 billion deal, it hasn't traded at $11 a share around this level for 2 years. So could you really not have gotten it for $11 a share when it was trading closer to 4? Or maybe are private investors trying to pay less and as the market picks up, being willing to pay more as well?
Well, I mean, public companies trade every day on the screen, and there's an established price. And private equity, take privates happen at premiums to wherever that price was. So, that's why it's interesting for firms like ours to look in the public markets because they're quoted on the screen every day. And, if we're willing to pay a premium, deals can get done.
Which raises the question, where do you see opportunities now, looking at 2024? Are there certain industries or sectors that are particularly attractive, public market or private market, based on the value corrections we have seen?
Yeah, I think there's kind of 2 ways we think about deals. There's opportunistic, so where the deal comes from. We've been very active in looking at the public markets because that's where a lack of liquidity has been and where a value correction has happened. And so we'll continue to look at public markets, corporate carve-outs. Their other interesting segment is in family-owned businesses. There were a lot of companies started in the 70s and 80s by founders who are now in their late 60s, 70s, even 80s, who, for estate planning and other reasons, are looking to sell their companies. We bought, for example, in the summer of 21, Medline, which is a very large family-owned business, and we're looking at some others now. So that'll be one area. And then there are thematic sector themes that we're pursuing. Things around the energy transition, the whole ecosystem of utility services and utilities investing in their transmission and distribution grids. That's been a major theme. In addition to the life sciences ecosystem, a lot of new drug development happening. We're not developing the drugs ourselves in our private equity business, but we are investing in the whole ecosystem around it. So those are a couple themes.
I'm glad you brought that up because the other piece of this equation, of course, is exits and what you would be potentially looking to exit. There's a report by Reuters just today that you're reportedly exploring potential sale of Anthos Therapeutics.
Well, Anthos is a product company that we have in our life sciences business where we actually did, in partnership with a strategic, develop a drug which has had good data. And that may be something we look to bring in a partner or sell, yes.